Hello friends, thank you so much for tuning in. Today I'm going to teach you how to trade in natural gas instrument. So when you're trading in natural gas, three things you need to understand. First is how to draw the levels on the future chart. Second thing is what strike price to purchase and during expiry and non-expiry days. And the third thing is how to check inventory, because when inventory happens, all of a sudden market can move to any direction rapidly. So every trader must know how to check inventory, and natural gas inventory comes on every Thursday around quarter to 8 or 7:30 to 8 o'clock, any time between this time frame. So you have to be very careful. Also, don't try to trade with more quantities. It is risky because in natural gas you have to give logical stop loss. That's the reason what happened is the loss percentage while trading will show more. Okay, so try to trade with only one lot and follow the risk and reward, and also level to level you can trade. And one more thing is, you don't have to haste in natural gas because it runs slow during morning time. So sometimes to reach to your target it will take more than 6 to 7 hours. Okay, so you have to be patient in trading in natural gas. So please watch this video completely, and I hope that this video will surely help you. And if you're new to my channel, please consider subscribing. Thank you for tuning in. Please watch this video completely. So what you have to do over here is, I don't use many strategies and all. It's very simple. Just look at the price action. So this is a natural gas Jan future chart. Okay, so on the top you could see 1 minute, 3 minutes, 5 minutes. So we will select day. So day is highlighted, and now what we would do is, we would first 10 to 15 candles we will mark the top and the bottom of the candles. So you have to mark it exactly as it is. Okay, top and bottom of each candle. So try to mark it for at least 10 to 15 candles. So let me mark it everything and then show you. Now you could see, friends, there are so many lines I drew looking at the top and the bottom of the previous candles. Okay, now what we would do is we will go to the 5-minute chart. But before that, one more thing that we have to do here is the first candle. Yesterday's candle, I mean Friday's candle. This is Friday's candle. We have to take 50% of this candle and draw a line in the center. Okay, so what you can do is you can use this scale given over here and then make 50% of that like this, and you could see the center line. There you draw a line and make a different color of that line, because these are the black lines, so make it red. You can change the color from here, and line tool width you can change. So this is the 50% of the previous day candle in day chart. Okay, not 1 hour chart, in day chart. We have done this. Now what we would do is we will go to 5 minutes chart. So let me click here. Okay, now let me explain how to understand the levels. So now we have very interesting part over here. So whatever that I am teaching you, everything will not work 100%. So nothing is 100% over here, but it gives you an idea how to understand the levels and how to trade smartly. Okay, now let me use the brush over here. Okay, now this particular line we already drew looking at the top and the bottom of the day chart. Okay, so there are multiple lines that we drew. Okay, now what will happen is we don't have to take entry over here. We don't have to take entry over here to be on the safer side, because we don't know whether the candle will go up or of this line or it will come down. So we don't have to take entry over here. To be on the safer side, in 5 minutes chart, wait for the next candle. If the next candle appears above this black line, then only we will take call side trade. If it appears below the black line, we will not take call side trade, or in between the black line we will not take any trade. So it is above this black line, so we will make our entry over here. Our entry we will make, and what should be our target? Our target should be this black line. Okay, so this should be our target. If market rapidly gives you point and breaks this level, now this will be your bonus point. Okay, now you can exit the trade or you can trail the trade. Now you could see market has gone till here. Okay, so normally what we do is we will try to look at the previous swing. Now this is the previous swing. Now what is the top of this previous swing? This is the top. So we will draw a line over here. So we normally think that this is the swing top, or this is the swing top, and we think that this is the swing top and market will reach till this level, and what we do is we hold the call side trade, and we feel that market will reach till this level and it will break and it will go upside. Okay, and then what happens is from this particular level market starts falling down, and we are holding call side trade thinking that it will come up and it will break this level. This level market will break, and it will also take your stop loss. If you are putting your stop loss somewhere here, market will break your stop loss and you will be in loss. Okay, so you don't have to trade like that. We normally what we do is we will try to take previous swing top and we trade right. So we don't have to trade like that, because this will happen. Market will take all your money. Now friends, market has reached till this level, and what is our next level? The black line that we drew. The next level is this one. This is the next level. Okay, so now we have to understand market will go up or down. It did not break the previous high, but it is, just forget about this. Market is sustaining here. Okay, now if it goes up, this will be our level, this black line, and if it goes down, if we are taking, suppose if we are holding call side trade, and if we think that market will touch this level, then this will be our level. Okay, so what we have to do is we have to understand one more thing. In order to get this your next level, we have to understand one more thing. Market has to create one candle that should not be touching this black line. Now this red candle is touching the black line, so we will not take one more call side trade. We will just exit our call side trade here. Okay, because market is not making fresh candle above this black line. Now you could see this candle, this is also not above this black line. It is touching the black line. This also touching the black line. This candle also touching the black line. So we will not take call side trade over here. Okay, and what we will do is we will wait for the market to make a fresh candle above this black line. So market has not made any fresh candle above this black line. Now market has to make a fresh candle below this black line. Now this candle, this particular big candle, this is also touching this black line. Okay, now can we make our entry over here? We cannot make a entry over here. But this particular candle, market has made below this black line. Okay, so here what will happen is we can take a P side trade. So suppose this is our entry. If this is our entry, our stop loss, so what should be our stop loss? So our stop loss should be, it has to be logical stop loss. Normally what people try to do is people will try to keep the stop loss above the previous candle. So they will try to keep the stop loss here. So now if you look at this green candle and this red candle, market has gone little bit up than this red candle, because the players knows that your stop loss would be somewhere here, so they will take your stop loss. So what you need to do is you need to give a stop loss little far. So let's make our stop loss this much. Okay, this would be our logical stop loss if we are taking entry over here on the wick of this red candle. Now what would happen is market will try to go up. Okay, you don't have to worry because your stop loss is safe, and then wait for the market to come down, and slowly market will come down. Okay, you don't have to exit here. Wait for this black line to get touched. Now here the market has touched the black line. Okay, so this should be your exit point. Okay, but if the candle comes down rapidly, then what you can do is you can take the extra bonus point. If the candle is sustaining on this black line, better to exit. Okay, so that's how you can make the point. But in natural gas, what happens is it will take time from this level to this level come. Okay, now here if you see this level, this is at 1540, but to come to this level, how long it took? It took almost, sometimes it will take complete one day. Okay, so that's why you had to have patience in the market. So likewise you have to logically put your stop loss and try to take your target. Okay, now one more thing I will talk about, the red line that we drew, the 50% of the previous day candle. Let me explain that also. Now if the market sustains above this red candle, that means it will be bullish view. Market will have bullish view. But if it sustains below this red line, that means bearish view. Okay, so that for your understanding, we will draw this line. Dear friends, whenever inventory happens in natural gas, market can move to a particular direction very speedily. So this inventory will come every Thursday between 7:30 to 8 o'clock. So we had to be aware and we had to check the inventory data. So how to check that? You had to go to investing.com. Here you have an option called economic calendar. You have to click over here. You will see this box. If you don't see natural gas over here, you have to select the drop down. From this drop down, commodity section. Okay, once you select commodity section, natural gas will appear here. Now here there are 3 numbers. So inventory is nothing but storage that will give you the data of demand and supply. So how much supply is there and how much demand is there. So now minus 8.47% was the data of the natural gas market. Now there was a prediction that it will come till 0.306. okay, so 0.306, that means the supply has increased. Before, the supply was very less because it was minus 8.47, but now the supply has increased because it is minus 0.306. So even though it is showing in red, but what happened is the supply has increased because the previous data is minus 8.47, now it is just 0.306. So the supply has increased. So whenever the supply has increased and the demand is less, then what happens? Market will try to come down. It will go towards P side. Now this was the predicted one and this is the actual one. So actual one is 3.354. okay, so the supply is more. That's why demand is less. So when the supply is more, that time market will fall. So this was the previous data. Now if you look at the natural gas chart, market has fallen down towards B side as per the data. So you have to be very careful checking the inventory. That is very, very important, because when the inventory comes, market can move to any direction and these levels will not work. So what we need to do is we need to be aware at every Thursday between 7:30 to 8. Keep checking the inventory data and be careful while trading. And also one more thing is, when you trade in natural gas, you have to also check the strike price. Now this is the future chart, so we'll go to option chain. Okay, now when we go to option chain, don't take strike price out of the money if there is no expiry on that particular day. Okay, if there is no expiry at that particular day, if you take out of the money strike price, by the time of the expiry date it will decay and you will not get any profit. So always try to trade with at the money price, at the money or in the money price of the option chain. So here the first one or the down one. Okay, so try to take the strike prices which are closer to this blue, the spot price here. Okay, don't take out of the money when there is a time for expiry, also when there is no time for expiry. Okay, out of the money, if you take below 40 strike price, if you take below 50 strike price, it will slowly 10 times it will fall and your trade will become a losing trade. Okay, so don't take those strike prices. I have made losses in the past, so that's why I'm telling you those strike prices will not increase. So you have to take at the money strike price in natural gas, and only when there is expiry, that at the money strike price will reduce. That time you can take multiple quantities. But when there is no expiry, don't take more lots. Don't take more lots. Try to just trade with one lot. Don't take more lots, because sometimes what happens, you have to give more stop loss, so your loss will show more. So don't take more strike price, just do it with one strike price. And if you have more money, then you can trade in natural gas futures, or you can do option selling in natural gas. So when you do option selling in natural gas, that time you can take out of the money OTM, out of the money strike prices. So option selling is safe, but for that you need more capital. Okay, and if you want to trade in futures, at least 1 lakh capital you need for natural gas. So if you don't have more capital and if you want to do option buy, Then follow whatever that I have taught you, and also check the inventory on every Thursday. I hope this has helped you. Keep practicing. As I said, don't take more lots, just practice with one lot. Thank you for watching.